Hi everyone, so welcome back to the audit chapter, and today we will be understanding the classic variable sampling. It is a further bifurcation of the sampling chapter that we were understanding. So classic variable sampling is generally used when we perform the substantive test of the details, whereby a sample is examined to determine if the dollar stated is materially correct, determines the presence of the and quantum of any misstatement. So it basically deals with the quantum transaction value in the variable sampling, and it's used in the substantive procedures where we perform the test of details. Determining the test of objectives. So generally to test the reasonableness of one or more assertions about the financial statement dollar and identify the characteristic of the interest, that is the misstatement, and also to ensure the population is appropriate and complete. So in this case, to detect the understatements, auditor should select the sample from the population in which the omitted items are included. Also identifying the individually significant items that the auditor decides to examine the 100% are not included in the population which is subject to the sampling. So how to evaluate the sample results? So first we project the misstatement to the population to determine if it is materially misstated. In that case, regardless of the materiality of the projected misstatement, auditor should ask management to correct misstatement discovered unless it is clearly trivial. Also, sufficiency of the sampling evidence for proposing the adjustment. Here, auditor may consider the extent of testing to determine if sample can provide a precise result or not, and small samples may not be able to provide the precise estimate audited in the transactions. In analyzing the misstatement identified, auditor may observe that many have a common feature. In such cases, auditor may decide to identify all the items in the population that possess the common features and extend audit procedures to those items. Also, such misstatement may be intentional and indicate the possibility of the fraud. When evaluating the misstatement, the auditor may request the management to examine the class of the transactions, account balances, or disclosures in order for the management to understand the cause of the misstatement identified by the auditor and to perform the procedures to determine the amount of the actual misstatement and make appropriate adjustment to the FS. In addition to the evaluation of the frequency and the amounts of the misstatement, auditor must consider the qualitative aspect of the misstatement, which includes nature and cause of the misstatement, such as whether they are due to error or fraud, and discovery of the fraud would require a broader consideration of the possible implications. Also, the possible relationship to the misstatement to other phases of the audit is required. In the case of the interim sampling results, since the sample should only be projected to the population from which it was selected, they can't project the interim sampling results to the year-end results. So, however, auditor considers the interim sampling results to determine the necessary further audit procedures at the year-end. For example, considering the exception case where it may be not okay to project the misstatement to population. For example, sample of the revenue items may appear okay to not to project misstatement to the population. Currency transactions. So ideally, foreign currency transaction could not have separately examined for this issue. So it may be not okay to project the foreign currency issue misstatement to the entire population of the revenue. So, uh, moving forward, what are the factors that affect the sample size? Tolerable misstatement, expected misstatement of the population, allowable risk of the incorrect acceptance, standard deviation, assessed RMMs. These are the few factors which affect the sample size. So, tolerable misstatement or inverse effect on the sample size. So, dollar misstatement that the auditor can tolerate without considering it as a material misstatement. If the tolerable misstatement is greater, sample size is less. So tolerable misstatement for the specific test, which when combined with the tolerable misstatement for all the other tests, should not exist the financial statement materiality. Expected misstatement of the population, which has a direct effect on the sample size. Auditor's estimate of the dollar misstatement in the population, estimated use of the factors like prior year, test of the details, results of the test of the controls or the related substantive test. So if expected misstatement is higher, the sample size is higher. allowable risk of the incorrect acceptance, which has the inverse effect on the sample size. So this that the auditor is willing to take of accepting it materially misstatement, which is type 2 of sampling risk. If allowable risk of the incorrect acceptance is greater, sample size is lower. So based on the auditor's acceptable level of the audit risk and assess RMM, auditor may be willing to accept the greater DR when RMM is low. Then standard deviation, which has the direct effect on the sample size, which measures of the measure of the variation or scatter of the items in the population. So if standard deviation is higher, sample size is higher, and if standard deviation is very high, auditor may stratify the sample or use PPS sampling. We will discuss that. Assist RMM. So if RMM is high, auditor will try to reduce the detection risk by increasing the substantive test of the which leads to the increased sample size, that is increasing the extent. Also, the population size has the little or no effect on the sample size, especially for the large population, and auditor may need to consider only for the small population. Selecting the sample. So before selecting the sample, remove the high risk items that needs to be tested 100%, and then select the sample from the remaining items. Auditor may also stratify the items into the group strata and allocate the sample size to each group or stratum. Project sample results from the each stratum and add all the projections to arrive at the overall projections, and then group the strata may be created based on the various factors, which include the quantitative factors, other factors. After that, moving forward, the types of the classical variable sampling are we will discuss in the here. So types of the variable classical samplings are mean per unit estimation, ratio estimation, difference estimation. So to begin with the mean per unit estimation, auditor should determine the average dollar of the sample items, then multiply this average dollar by the number of the items of the population to estimate the total dollar value of the population. Then the ratio estimation, where auditor determines the audited dollar to the book value of the sample, and then multiply this ratio by the total book of the dollar to estimate the dollar value of the population. So used especially if calculated, audited, corrected, dollar are nearly proportional to the book or dollar. Then the difference estimation, here determining the average dollar of the difference between audited dollar and the book dollar of the sample. Then multiply this average dollar of the difference by the number of the items in the population and add the result to the book dollar of the population. So mean ratio estimation and difference estimation is calculated to for the classical variation variable sampling. So what are the steps that auditor should develop and evaluate and the variable sampling? So sample design, sample size, and sample selection is the first process, where determining the test objective is required, then defining the population is needed, and then defining the sampling unit is required, and then determine the tiers to calculate the sample, and then selecting the sample size is required. After that, performing the test of the details and evaluate the sample results, where project the misstatement is found in the sample to record it balance of the population. And that, similarly, the way we have discussed, mean per unit, ratio estimation, and difference estimation is used. After that, the acceptable range, which is equal to the point estimate and plus minus allowance for the sampling risk, and then form conclusion about the transactions or balance tested is used. So in this case, correct. If it is correct, then record book value falls within the acceptable range, and if it is misstated, record book value falls outside the acceptable range. And then documentation should be done, like what sampling is done and what results we have evaluated in those sampling. So this was all about the variable sampling. In next chapter, we will discuss further type of sampling. Let me know if you have any questions in the comment section, and I will help you to resolve them. Thank you and bye.